double-sourced this one now, with both Dow and Reuters making the call of 71,500 build in Feb, with the consensus call having been far more modest, 10,000. So, breaking news.
That's a double-take situation. I thought it was 7,000. It is 71,000. Interestingly, Carson, we kept saying, watch the participation rate. The participation rate has jumped from 65 to 65.3%. So more people out there looking for jobs, but also a lot of jobs actually added to the economy. So you get the unemployment rate stay at 5.4%.
So we've kind of, again, in this instance, and let's bring in Simon, there's the Australian dollar, incidentally. As mentioned, it's spiked on the news. It had pushed above the 103 handle coming into these numbers in any event, but it's only getting further momentum, as it were, since. And we have some instant analysis. Simon Boulton's from Aequalis. He's in studio. We're also going to take you to Steve Shepherd from Randstad in Melbourne, patiently waiting by. But Simon, to you, defying expectations, not just on that monthly read, but on the unemployment rate staying static, and on the part rate rising, not falling. Your reaction?
Extraordinary number of jobs created. I mean, I don't know if those figures can be checked, but 71,000 jobs is, incredibly
confirmed,
high.
absolutely.
It is confirmed,
yep.
Which is what, 7 times what the expectation would have been. Participation rate's interesting. I think that the number of job seekers is slowly increasing. There's a bit more despondency with people in the current jobs are being overworked. So that's probably a reflection on the participation rate at the moment.
It's only, though, 1 month.
Yep.
And again, at the risk of being the killjoy, you can't read anything into that, can you? It's not a trend. How can you say one set that's blown expectations equals the economy?
Every month we say this, Carson. The numbers always come out surprising. But just that 71,000 in isolation, is an extraordinary number when you think about the reports you hear about cuts and so on. So it's I just think that this short-term trends that the unemployment figures give us, it just isn't a true reflection of what's happening at the sort of bigger end of the.
Sum it up in one word. What's it like at the coalface?
As it has been for the last 5 years, cautious.
Cautious. Steve Shepherd from Randstad in Melbourne. That is the theme that we've been talking about for a long time, cautious. Is there any chance we've seen a turning point, though? Even when you look at the participation rate, the fact that people are willing to get out there and start looking for jobs, that suggests something quite significant, I would have thought.
Yeah, look, I think it's probably taken us by surprise, all that number and the significant increase there, but we have seen job ads going up over the last couple of months consistently in terms of online. And I think myself and my colleagues have both been talking the last few months about the optimism we're seeing in the market, just from an employer perspective and from an employee perspective. So I think we're now seeing some of that starting to translate into the market. And interestingly enough, even our own research that we've just released on job seekers is showing a significant shift in optimism, where 12 months ago it was all about job security. Now people are now seeing remuneration and benefits as a significantly higher factor than job security, which indicates that they're seeing more opportunities in the market. And certainly that participation rate, a fairly significant increase there as well, would seem to indicate that.
If it's all about money, that must be adding to the caution and the worry in terms of costs that we know the businesses are already quite focused on, though.
Yeah, I think that's the interesting challenge for employers going forwards. We're still seeing, a level of caution in the market, and certainly the sentiment in the market. The employees' perspective, I guess, is a little different from that. So it's going to be a challenge for employers to manage that balance. But I guess it's a reflection of the opportunities that they're seeing available for them that will be driving some of that sentiment.
Simon, before we break open the Krug or whatever tickles your fancy, 17,800 full-time employment. That says to me, and I haven't got the full part-time component yet, but there were more part-time jobs inside these numbers than there were full-time added. So again, that actually goes the way of the United States. At least that trend is consistent.
It was just shy of 54,000 part-time.
Well, there you go. So by far and a country mile, these aren't long-term prospects for Australians.
I think definitely that caution, there is that, as I think my colleague there was saying, a bit more positivity through the beginning of this year.
Because what qualifies as a part-time job? How many hours do you have to work?
I think it's 1, isn't it?
1, exactly. So really, again, what is that? What are your prospects like if you're working an hour walking the dog?
No, it's true, Carsten. But organisations are taking making a hedge. They're hiring people on contracts. They're hiring temporary people. They're seeing how they go. It's a low-risk option. So I think that's where some of this participation rate changes are coming from as well.
But we saw housing numbers this week, and they are going backwards, not forwards, on a trend basis. That tells you that as a store of value, people aren't voting with confidence in that direction of the economy. And that's got all the multiplier ripple effects. If it doesn't fire, in other words.
Yeah, sure. I mean, no job, no home loan.
Yeah,
so
particularly if you're a first-home buyer, which is important. We're not going to get off topic, but
no, sure.
That's not firing, is it, in fairness?
No, I wouldn't have thought it is. The increase in salaries might give people a bit more of a potential to get into that housing market, though. Certainly at the first-time buyers sort of level.
Yeah. Do you think, I mean, Steve, just shed a bit of light on the kinds of extra demands when it comes to pay that employees are putting out there when they're going to employers. Are we talking big jumps? Or just let's start talking, given the last couple of years we haven't had one conversation, post GFC, etc.
Definitely an element of that, and I don't think it's all about salary as well. We're seeing flexibility rise very quickly in terms of preference. So, I think it's about a negotiated balance of those things, and not necessarily taking remuneration and benefits as being all about benefits. It's about, can flexibility play more into that in terms of work-life balance? What other options are there available for the business, and being that negotiated outcome? So I think it's definitely, as you said, an element of, it's been a couple of raw years. It's, we've hung fast there. It's maybe time to at least begin having that chat. So I definitely don't think it's all about money.
Okay, on flexibility, how quickly is that becoming a big issue? As in, when did flexibility start coming into things? It just seems, even we've had the International Women's Day recently, and that's been a topic more broadly of discussion, not just talking about flexibility for women, but for men as well. And a lot of organisations now starting to really welcome that.
Yeah, look, I think it's been around for a long time. I think it's just probably you're seeing it rise more up the level of importance, particularly from an employer demand. People are recognising that even flexibility in terms of this notion of being a free agent, whether I'm a temporary worker or an independent contractor, that I'm more in control of my career. So I think we're seeing different shifts in that, and to the point earlier around the increase in part-time jobs. I think we've seen again through the last 6 to 12 months, as we've tried to predict what's happening, we'll see a rise in part-time jobs, and corresponding the next month a drop in part-time jobs and a rise in full-time. So I think that goes to Simon's point about employers still hedging their bets there.
Yeah, looking across the 12-month spectrum as we now can, February of 2012 the unemployment rate was 5.25%. Today it's 5.4%. It's barely moved. You started this conversation saying caution. Perhaps the more appropriate word is steady.
I agree, and I think those other signals in the market at the moment are retention. And we went through this back in late 08, 09, when it sort of switched from how do we get more efficient to how do we keep the good people. And that retention sort of behaviour, I think, is starting to happen as well. Work-life balance, salaries, bonuses are all sort of coming back into play. So to see the retention strategy starting, I think bodes well for for a continued, maybe slow increase in unemployment, but not certainly a meteoric rise.
Is that sector specific, in fairness?
No, I mean, the sectors that we cover at Aequalis are more on the financial services markets, the accounting sort of areas.
Totally, you hear of whole departments still being said sayonara, and it's kind of no love lost. There's your brown box, pack it up and hand back your BlackBerry.
Yeah, I think that if you actually added up through the news reports of how many people have lost their job this month, maybe perhaps rather than looking at the job adverts, that would be more sort of reflective of the balance of creation of jobs and loss of jobs.
Okay. You're satisfied on these numbers to finish it that the ABS is out there collecting as required, or that's still a question mark?
You do not want to believe these numbers, do you?
I don't want to believe them, because we don't believe them, frankly, do we? You don't believe them.
I said on the way in, what I'd love to be able to do is come into the studio today and leave, going to the ABS head office and saying, well, show me between now and next month when I join Carsten and Brooke, what are you counting? Show me the data, show me the pieces of paper, show me the... Because without that, it's very difficult to ascertain where these numbers
are. They're probably awaiting replies via fax.
Do you think? Or handwritten post?
There you go.
Postcards.
Steve Shepherd, any sensible talk from you to finish off this segment?
I think the only sensible thing is we should stop listening to what the economists say, because I think in the whole time we've been running these sessions, we rarely get them right in terms of the predictions.
You couldn't resist, could you, economist bashing, to finish it all up. Steve Shepherd from Randstad, thank you so much.
Very much.
We'll be talking to an economist, though, in fairness, in a few moments' time, and not just any economist, any garden variety, senior economist at the NAB, Rob Henderson, joining us for further commentary. Simon Boulton from Aequalis, want to thank you as well.
Thank you very much. And we might just throw up, if we can, the Australian dollar chart, that intraday, just to show you that spike, because now the chance of an April move, an April cut, has the odds have actually just gone down to 4% now. So with such a strong read, it's very hard to see how there's even a 4% chance, perhaps even priced in there.
Frankly, to have called it a live meeting anyway was going to be a